This video is a review of Sojitz's fiscal year 2025 first quarter financial results, the period from April to June 2025. Sojitz Corporation is a Japanese general trading company, Sogo Shosha, that engages in a wide range of businesses globally. Sojitz is one of the 7 major trading companies in Japan. FY2025 first quarter summary. In the first quarter of fiscal year 2025, Sojitz recorded a profit of 21.1 billion yen, which represents 18% progress toward its full-year forecast of 115 billion yen. And this result is in line with the company's initial plan. Both core operating cash flow and core cash flow showed weaker performance compared to the previous year. While core operating cash flow made some progress toward the annual target, core cash flow deteriorated significantly and is expected to stay negative for the full year. Performance was supported by strong results in the Energy Solutions and Healthcare Division and the Chemicals Division, despite the absence of one-time gains recorded in the previous fiscal year and a drop in coking coal prices. The impact of new U.S. tariffs has been limited so far and is expected to remain within the 5 billion yen buffer that was anticipated at the beginning of the fiscal year. The earnings structure is expected to be weighted, with approximately 40% of profits earned in the first half and 60% in the second half of the year. The projected dividend per share for fiscal year 2025 is 165 yen, with equal interim and year-end payments of 82.5 yen each. Profit progress is only at 18% so far, but Sojitz expects its earnings structure to be weighted, with about 60% of profits generated in the second half of the year. Therefore, it is roughly in line with their plan. Summary of profit by business segment. For the first quarter of fiscal year 2025, compared with the same period in fiscal year 2024, the total profit for the period decreased from 23 billion yen to 21.1 billion yen, marking a decline of 1.9 billion yen. In the automotive segment, profit declined slightly. This deterioration was mainly due to reduced profitability in the Puerto Rico automobile sales business, which was impacted by U.S. tariffs. The Energy Solutions and Healthcare segment saw a significant increase in profit, rising from 2 billion yen to 4 billion yen. This was driven by several factors, including the consolidation of new companies, growth in energy-saving services, asset replacement in the solar power generation business, and increased contributions from an LNG operating company. In contrast, the Metals, Mineral Resources, and Recycling segment experienced a substantial drop in profit from 5.5 billion yen to 3.5 billion yen. This was largely attributed to a decline in market prices within the coal business. The Chemicals segment achieved a moderate increase in profit, reflecting steady performance in overseas trading businesses. The Consumer Industry and Agriculture business segment also saw an increase in profit, mainly due to higher sales volumes in the overseas fertilizer businesses. In the Others category, profit dropped sharply due to the absence of one-time gains that had boosted results in the previous fiscal year. Overall, the performance shows continued strength in non-resource segments, particularly in energy and consumer-related businesses, while resource-related segments experienced weakness due to sharp drop in coking coal prices. Shareholder return policy and recent actions taken to enhance returns. For fiscal year 2025, Sojitz has announced a dividend forecast of 165 yen per share, which represents a 10% increase compared to the previous year's dividend of 150 yen. This aligns with the company's policy of maintaining progressive and predictable, stable dividends. In addition to dividend payments, Sojitz also initiated a stock repurchase program. The company decided to repurchase up to 10 billion yen worth of its own shares, or a maximum of 2.8 million shares, as announced in May 2025. By the end of June 2025, approximately 1.9 million shares had already been repurchased, amounting to about 6.7 billion yen in total. These shareholder return initiatives are part of a broader policy under which Sojitz aims to allocate approximately 30% of its core operating cash flow over a 3-year period to shareholder returns. The dividend payout corresponds to about 4.5% of shareholder equity, demonstrating the company's intention to deliver stable and attractive returns to shareholders while maintaining financial discipline. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 3,570 yen as of July 30th. U.S. ADR stock is currently inactive. The stock price declined following the earnings announcement, reflecting weaker performance, partly caused by falling resource prices. Current PBR is 0.79 and PER is 6.5. Dividend yield is 4.62%. Compared to the last few years, all PBR, PER, and dividend yield indicate that current stock price is relatively cheaper. In the long term, the stock price has been rising, but much of the EPS growth has been driven by partly share buybacks. As a result, key indicators suggest that the stock still remains undervalued. Conclusion. Sojitz's first quarter results for fiscal year 2025 were broadly in line with the company's expectations. Performance was supported by non-resource segments like energy, healthcare, and consumer-related businesses, but some weakness in resource-related areas due to falling coal prices. Sojitz continues to enhance shareholder returns through increased dividends and an ongoing share buyback program. Although profit declined year-on-year, EPS earnings per share is expected to continue to show an upward trend. Dividends are also increasing, so shareholders can likely remain optimistic about the future.